Good evening and welcome to our second webinar in the series, the second session of the AARP BI Entrepreneurial Workshops hosted by AARP in collaboration with the Virgin Islands Small Business Development Center. My name is Mary Jo Williams. I'm the Network Marketing Coordinator at the Virgin Islands Small Business Development Center. Our presenter for this evening will be Mr. Raymond Henry. He's a business counselor at the Virgin Islands Small Business Development Center, and the subject of his presentation is the fundamentals of business credit. We thank you for being here, and we want you to know on behalf of our sponsor and host, AARP in the Virgin Islands, the AARP has been working for you and the communities across the nation for over 60 years. They are constantly providing resources, information, and host educational events, these workshops being one of them, as well as fun events in many ways and for all ages. We hope you have signed up for all of the workshops, not only this one, since there are 3 more coming up. If you have not, be sure to visit their webpage at www.aarp.org/BI and click under the events tab where you will find the other 3 workshops of this series and many others that you can take advantage of. Now, our presenter for this evening is Mr. Raymond Henry. He has over 25 years of commercial banking experience. He has worked on St. Croix, St. Thomas, the Turks and Caicos. He's a graduate of the University of the Virgin Islands, and he has a Bachelor of Arts in Business Administration, accounting, intermediate. He has several certifications: accounting/administration, intermediate export and trade counseling. He's been a business counselor at the Virgin Islands Small Business Development Center for 5 years. No, it's longer than that. Since 2013, for 8 years. Wow, time's flying. He was a 2016 state star for the U.S. Virgin Islands. His other life experiences: he was a forest officer, an insurance agent. He's done construction. He's been a small hotel manager, and he loves to play tennis. So without any further delay, help me welcome Mr. Raymond Henry. Mr. Henry?
Good evening all, and welcome to Fundamentals of Business Credit. I am excited to be here and to share some important information with you on business credit. This evening, we're going to cover the definition of business credit, sources of business credit, types of business financing. You'll have an understanding of personal credit versus business credit, securing business credit, bank expectations, qualifying for business loan. If we were to follow the definition of business credit, we know, well, before we get into the definition of business credit, one of the biggest challenges of small business owner faces is securing financing. And the second major challenge is to ensure he maintains financing to remain in business. A working definition of business credit is the ability of a business to attract financing and repay its debt in a timely fashion. Why is good business credit important to your business? The business credit record is used by other industries or companies to evaluate your business credit worthiness and make decisions to sell to you, to lend to you, to lease equipment, to increase your line of credit, to offer more favorable terms and financing rates, and to consider you as a business partner. In addition, government agencies and contractors will reference your business credit. Insurance firms does the same, and they will use your reports to decide whether they want to do business with you. A critical distinction in your search for credit is whether your business is a startup or an existing business. Existing businesses should have better options. Entrepreneur.com reports that 90% of business owners know nothing about business credit. Good credit is the lifeline of your business in terms of business loans, insurance premiums rates, lease payments, lower interest rates. This would be a good time, Mary Jo, that we could ask the question, a poll question, are you in business?
Okay, we have launched the poll question. Are you in business? Simple answers, and we'll give you another 5 seconds to complete your answers. And we're looking pretty good here, Mr. Henry. Poll is closing now. And of those people participating in the poll, 69% are currently not in business, and 31% of the attendees are in business.
That's good. In that case, we will have a lot of information for people who wants to go in business. 85% of small businesses borrow from commercial banks. What we will focus on this evening is, in our situation, we will usually refer to banking as our main source of credit. But you can get other sources of credit. An equity solution is where you sell an interest in your business to people who will own part of your business. They could be called venture capitalists, angels, or private individuals. Banks, commercial credit unions, lending clubs, finance companies, and there is also online sources of credit. You can get credit for your business through vendors, to trade credit from your suppliers. You could get another source of credit for your business from your family members, or you could use your own personal cash, credit cards, home equity, or second mortgage. You may want to find friends or fools to invest in your business, but this is just for fun, friends and fools. Or you may keep your day job and start your business on the side. There are reasons why you need to get financing or funding or credit for your business. There are reasons why you want to access capital. In a survey done by SBA, it's reported that the major reason for failure is the lack of capital. If you don't have all the capital, you need to access capital. Another goal you may want to create credit is to separate and preserve your personal credit away from the business credit. We will discuss that a little further as we look at personal credit. A good reason for borrowing is to achieve and maintain personal credit. I will explain that further. You may want to access credit to remain cash flow friendly. You need cash in your business, and if you don't have it, you need to get it. There are types of borrowings that could minimize your interest expense. And of course, if you borrow, you have interest payments, and that might affect your tax filing. Types of business financing. Personal. You could either get it from your savings or bootstrap. Bootstrap is when you use other means of financing your business. You could also use credit cards, or you could take a personal loan from a local bank and invest that money in your business. Supplier credit is another type of business financing. Supplier credit is one of the main means of beginning or building business credit. It's where you have a relationship with a supplier and they offer you terms, 30 days net, you will hear that term, 15 days net, 60 days net, where they give you credit for some goods that you want for your business, and they tell you in 30 days you will pay the full amount. The terms, you will hear these terms interchangeably. Funding, financing, credit are used interchangeably. You also get financing through government lending agencies. The local one we have is EDA. We have some nonprofits that also give grants. You could get funding or financing from private investors and angel funds. Lately, you can get funding through crowdfunding. That's a topic all by itself, so we will not dive further into crowdfunding. Bartering, factoring, and equipment leases are types of business financing. I will explain bartering. Bartering is where you have a service or product that you will exchange with another business or individual, and there's no money exchange, but you've exchanged services or products. Factoring is a situation where you have receivables. If your business is involved in sale of goods, or if you are, for example, if you are a law firm and you have a lot of receivables, those receivables are valuable to you, they are an asset. But in order not to wait 60, 90, or 180 days to get paid, you could factor or sell those receivables to a factoring institution. It could be a bank or an institution that does that kind of business called factoring. So if you had 100,000 in receivables, instead of waiting 90 days or 120 days to collect it, that factoring arrangement, they would give you 95,000 and they would hold the paper of all your receivables until they mature. A good example of factoring, we don't have it in the Virgin Islands, but it's, you need to know it. It's a type of business financing. In our local situation, if you work for the government and you had a paving contract for $1 million, yes, you know you could do the job, you know you complete the job, the government says you'll get paid, and then you wait 60 days, 90 days, 180 days. But you have other business activity to continue. You could go to a factoring bank or agency and sell that receivable. They will discount it and tell you your 100,000 contract will give you $80,000 for it. You will take that $80,000 and have it cash in hand, and then the factoring bank or agency would hold on until the contract is paid by the local government. Equipment leasing is another type of way you could finance your business. Instead of going out and buying a generator for $27,000 to keep your business operational, you might lease the equipment. And that way, you don't have to come up with all the capital expenditure of buying the generator for $27,000. You lease it and pay $700 a month for the next 5 years or whatever the leasing terms are. Mary Jo, this is a time we should ask our audience if they have, or if they are aware of the personal credit score.
There's the question, do you know your personal credit score? We'll give you 5 more seconds for that. The poll is now ending, and 71% of the people know their personal credit score, 29% do not.
Thank you. That makes my job a little easier. Every business owner has two credit profiles. They've got a personal credit profile and they should have a business credit profile. The reason I have personal credit versus business credit is if I can explain to you how your personal credit or your personal credit score is calculated, you will understand what happens with your business credit score and the difference. So the question is, why can't I use my personal credit? It may cause problems. We shouldn't say you cannot use your personal credit to support your business. What we should say, you should avoid using your personal credit. And one of the major reasons for avoiding using your personal credit is your intention should be to create business credit. Remember, the working definition of business credit is credit in the name of the business. That's a simple definition for business credit. The business on its own has its own funding and in its own name. So if you use your personal credit to fund your business, you are not building, you automatically not building your business credit. Secondly, your personal credit, if you use it in your business without any restrictions, will reduce your score due to the many times you're going to use your personal credit. Personal credit is designed for personal use. Business requires a lot of transactions. Further on, I'll show you how your personal score is calculated, and you will see that the very usage of your personal credit for the business, because the business is requiring more attention and more activity, will affect how your personal credit score is going to be affected. If you continue to use your personal credit without restrictions in your business to support the financing of your business, you will eventually reach a position where your financing for the business and the personal becomes unavailable. Personal credit, how it is determined. Your personal credit is based on an algorithm. It's a big word, but it's all mechanics where FICO, or you've heard of FICO score, is use that algorithm where they use your payment history, which is 35%, amount owed or utilized is 30%, length of your credit history is 15%, type of credit use is 10%, and accumulation of credit is 10%. In order to keep your personal credit score at an acceptable level, you have to manage your payment history, 35%, utilization amount owed. If you had a business credit card or a personal credit card, sorry, of $1,000, you should not utilize maximum $1,000 because that will affect your score. In reality, most of the credit companies who give you personal credit expect you to use only 30% of the limit that they give you. Anything above that will affect the calculation that FICO uses to generate your personal credit score. Your personal credit score ranges from, in some places it says 300 to 850. How you can improve your personal credit score. Pay your bills on time, get current and stay current, avoid max credit limit, and if new to credit, limit the number of sources of credit you take on. You will understand the reason for limiting the number of sources of credit you take on. There's a time period involved. Acclimation of new credit is 10%. The reporting agencies, if they notice that you've made several hard inquiries for credit, it would indicate to them that you're in trouble as far as personal credit is concerned. And your score will be affected because you have accumulated new credit in a very short period of time by having hard inquiries made on your credit. So if you're new to the credit, you need to limit the sources of credit you take on. Now, business credit is a little different. It is a rating from 1 to 100 that indicates your business ability to repay its debt or obtain trade credit. It reflects the risk of going 90 days late on an account within 12 months. So if you have a business credit score, and we'll get how you get to your business credit score, is between 1 to 100. It would indicate to an individual or another business who want to do business with you, if your score is between 1 to 100, where it is in that scale, the risk of going 90 days late on an account within the next 12 months. It is determined by compiling obligation information of your business, the legal files, and background information. At this point, I will tell you, if you're in business, your business credit should not be a mystery. We have in the Virgin Islands, the Virgin Islands Commercial Reporter. There's a St. Thomas version, that most of the banks use to see the activities or legal files. That's public knowledge that is available. There's also the Better Business Bureau, and there is the commercial or the business credit bureaus. Your credit file or your credit profile have other information. It has the number of lenders you've used, the amount of credit you've received, and your payment record. At this point, there are a number of business credit bureaus. There's Dun & Bradstreet, and I want you to focus on Dun & Bradstreet because they're the major player in the commercial or the business credit environment. There's Experian Business, there's Equifax Business, there's Business Credit USA, and there are a few others that's popular lately. Experian Business, you should be familiar with the name Experian because that's one of the consumer credit reporting agencies. Equifax, you should be familiar with because it's also a consumer credit reporting agency. TransUnion is also a consumer credit reporting agency. But our focus is on fundamentals of business credit, and this is an introduction. We want to cover as much information on business credit. So for the major business credit bureaus at Dun & Bradstreet, they've been around for more than 100 years, since 1841. And they're the big player in the field. But you should be familiar with Experian Business and Equifax if you choose to go that way. Now, business credit scales vary by bureau, unlike personal credit, which is more consistent because personal credit is based on FICO. Experian has a scale from 0 to 100, and at last check, they had over 27 million records. So if you got an Experian business report on your business, and it's 0 to 115 on using their scale, another business who would pull your Experian business report would see high risk, unlikely to get credit. It's rebuild time. 16 to 30, a score of 16 to 30 mean medium risk to moderate risk to lenders. 31 to 80, good credit, likely to get credit. 81 to 100 is excellent credit as far as Experian is concerned. It is important to understand the role business credit score plays in your loan application. I cannot emphasize that enough. The other major business credit reporting agency is Dun & Bradstreet. They're that big and they're so famous that they have their own score. It's called a PAYDEX score. Part of this webinar is to introduce you to the language of business credit. So if another business credit or business organization asks you, what's your PAYDEX score? They're asking you, what is your Dun and Bradstreet credit score? And Dun and Bradstreet has over 206 million records. Dun and Bradstreet was created in 1841. They're the biggest and the major credit reporting agency. They hold the largest supply of worldwide business information. And they have something called the DUNS. So if another business enterprise asks you, what's your DUNS number? You should understand the language of business credit. Just as you understand PAYDEX, you should understand DUNS. What they're asking you, what is your Dun and Bradstreet number, which is Data Universal Numbering System. Every business that has an account with Dun and Bradstreet gets a DUNS number. I would suggest that you get a DUNS number. Your DUNS number is a 9-digit business identifier code assigned to each business in the database of Dun and Bradstreet. It is the preferred worldwide way to identify businesses. Why this is important? If you wanted to do business with somebody in Japan or in Europe or the federal government, the first thing that you should ask that individual is, what is your DUNS number? The DUNS number will allow you to go to Dun and Bradstreet, put in DUNS number, and Dun and Bradstreet would give that business your location, the number of employees you have, the number of trades you've done, your payment record, and your PAYDEX score. They can use that information to make a decision whether they want to do business with you. Because they don't know you, you're in the Virgin Islands, but you need that equipment and it has to come from France, it has to come from Japan, it has to come from Australia. So Dun and Bradstreet is the clearinghouse. They're used worldwide. I did mention is the PAYDEX score for Dun and Bradstreet. So the other thing you need to remember is we're also trying to teach you the language of business credit. So if somebody says DNB, you should know DNB is Dun and Bradstreet. Business credit scores are based only on whether the business pays its bills on time. So if you have a score, a business credit score of 100, when they look at the report, they will understand that you pay your bills early. If you have a score of 90, payment comes within early discount period. Payment is prompt or as agreed, you get a credit score of 80. That's what you should shoot for. You should pay your bills on time. If you got a credit score of 60 from the Dun and Bradstreet, payment is 21 days beyond terms. So depending on the score that the individuals finds in your credit report from Dun and Bradstreet, they know exactly if they do business with you and you have a credit score of 60, that when they're dealing with you, they can expect payment 21 days beyond terms. That is information that they can use to determine whether they want to do business with you. Of course, if you don't have a credit score, it's unavailable, that's not good either. Why should I separate my personal credit from my business credit? We've asked that question before, but it's now that we had a comparison between your personal credit and your business credit, this is a summary of it. Personal credit would be a car loan, your personal credit cards, a student loan, home expenses. Business credit would be if you got a lease for a building, business contacts, business loans, and office equipment. But separating may help you reduce your personal liability. that is really one of the major reasons why you want to separate your personal credit from your business credit. Apart from knowing how business credit works and how personal credit works, we want to encourage you to limit your personal credit use in your business, because separating it may help to reduce your personal liability. And I want to emphasize this because you want to have the business credit, the business being funded by its own resources, business credit, and you don't want to be personally liable. If you commingle is a common word, your personal credit in the business, you're exposing yourself to personal liability for affairs of the business. Separating may help prevent personal credit from being lowered each time a report is pulled. Separating your personal credit from your business credit will reflect a more accurate company debt to income ratio. If your debt in the business is only business debt, then you have a better indication of how your business is doing. Of course, if you separate your business, your personal credit from your business credit, you don't have to give your personal guarantee for your business credit when you get business credit. And that also helps to reduce your personal liability. The question, we should have a poll here, Mary Jo, before I move into this section. You could choose any question at this point.
Okay, I will choose any question at this point. And the question I will choose is, what's the form of your business ownership? Are you a sole proprietorship, a partnership, an LLC, or corporation? And I guess we should have put none for people that aren't in business yet.
Yeah.
So for those of you that are currently in business, please select which one you are. And I will close the polling in 3 seconds. 3, 2, 1. And of all the people that are in business, 57% are sole proprietorships and 43% are LLCs.
Interesting, but that's the purpose of this webinar, information that our clients can use. The question should be, how do I go about securing business credit? I'm going to give it to you in steps, and the first step should be, you need to create a separate credit profile. In other words, when I started, I said every business owner has 2 profiles. You have a personal credit profile and a business credit profile. Oh, that's correct. So to get business credit in the funding in the name of the business, you need to create a separate legal entity. That's why we ask the question, what is the legal entity or structure of your ownership of the business? Is it an S Corp, a C Corp, or an LLC? These entities are considered separate from the individuals who own it. And because they are separate legal entities, they can have debt in their own name. And that's the whole purpose of having business credit. You want the business to have its own debt structure that doesn't involve your personal credit. So the next step would be, if you've created the S Corp, C Corp, or LLC, and I should say, I noticed in our poll, most of them are sole proprietorship. You could always move up to the next level of an S Corp or C Corp or an LLC from a sole proprietorship, so the information is still relevant. We skip partnership because partnership will not separate you from the business debt. If you are in a partnership in a business, the debt of the business will reflect personally to the individual partners. So that's why a sole proprietor cannot have business credit, because he and the individual and the business is one and the same. it would be defeating the purpose. That's why you have to create a separate legal entity, such as an S Corp, a C Corp, or an LLC. Once you've created a separate legal entity, you've got to get an EIN number. An EIN stands for Employer Identification Number from the IRS. That is like a social security number for your business. In certain documents, you will see it as TIN, Tax Identification Number. The next step is to get a DUNS number, because you want to create a credit profile for your business. So you have to get a DUNS number. And there's a website you could go and get a DUNS number. DUNS number is from Dun and Bradstreet. Of course, you could get other numbers from the other business credit reporting agencies, but I'm focusing on Dun and Bradstreet because they're the biggest, and I'm using their information, so to speak. Open a business checking account and business saving account. So you have your legalese. You have all your paperwork for a LLC. You have an EIN number. You have a DUNS number. You should go to a bank and establish a relationship in the name of the business. My experience is opening a checking account for the business will take you an hour and a half in the bank. If you're going to be in the bank for an hour and a half, you should as well use that time with the same documents and open a business saving account for the business. Even though you don't have any money to put in the savings at this point in time, you should create a business savings account. Then you should try to get commercial credit. And commercial credit or vendor credit is credit from people who you would normally do business with. If your business uses water, bottled water, for example, you could, and you're a good customer, you could ask them to give you a line of credit in the name of the business. And every month they send you an invoice with 30 days to pay it, and you have credit in the name of the business. But you could do the same thing with other suppliers. You could get a loan in the name of the business using the savings as collateral. That's an easy, cheap way of getting a loan in the name of the business, especially if you want to get a business credit card in the name of the business. I'm suggesting a business credit card because once you have one credit card, all the information is out in the atmosphere, and people will see what transactions you're doing with your business card, and you're paying it as agreed. You will get offers to get more credit cards. It's the same way it works with personal credit. It's hard to get the first credit card personal. Sometimes you have to get a secured personal credit. But once you have a number of transactions, for some other reason or however the world works, all the other credit agencies knows you're good and you look good, they start offering you credit cards. So I'm suggesting getting a loan, even if it's for $1,000 secured in the name of the business, and use it. You need to repay on time and in full. The reason why you want to pay on time and in full is because as you use the credit and you pay in full, and whoever you're doing business with report back to the business credit agencies, your score paid as agreed will give you a credit score of 80 automatically, and that's good and that's acceptable. That will help build your credit profile. Securing business credit. You should have as an owner your personal credit. We're saying avoid using it to finance your business. However, if you had to go to another agency or a bank, I'm going to use bank because that's what most people in the Virgin Islands would first go to. You don't want to give a personal guarantee. You don't want to give them your social security number. but they're going to want to know what your individual credit score is. If you know it, you could share it with them. The reason I'm using a credit score of 70 personal, most lending institutions think if you have poor personal credit, 9 out of 10 times you will handle your business activities or affairs in a similar fashion. If you have a good personal credit, although you're not putting it on the line, they think that you have the character and you know how to handle money and debt and responsibility. It makes it easier for them to deal with you. In reality, even the local banks have cut off when you come to them for a loan in the name of your business or a personal loan. If your credit score is under a certain number, it's an automatic decision. It's easy for them. They're not interested. So securing business credit, you want to keep your personal credit in good order. You want to have cash flow from day one. You have to be able to demonstrate that you have collateral to cover the loan completely. You have to be able to show that you have equity injection. Equity injection is your own money in your business, especially if you're a new business. Banks are reluctant to give loans to new businesses since they lack a track record or credit history. So you may have to impress them with, I've got my own money in this business, but I've got 50, I'm asking for 30. Businesses use a funding. You want to be able to tell the lender what you're going to be doing with this money. You also want to establish a relationship with a lender. In the Virgin Islands, we've got 5 major banks. You want to at least have 2 relationships with, we should have a relationship with at least 2 of the local banks in the Virgin Islands. It's just good business practice. You don't want to have all your eggs in one basket, is the same. So you want to build trust and invite and impress them with your business. You have to know your numbers, your financial statements. Use lenders' other products. Nothing a lender likes more than when you have your car loan, your mortgage, your savings account for your child, your credit card activity with them. All your commercial activity is with them. It just makes it easier to get a loan from that particular bank. If you can't get lending from a local bank, there are alternative sources. Community-based lenders, nonprofits, independently financed, private or public organizations. Or you could stay close to home. We've mentioned it earlier, family, friends, relatives, business associates. You may find a partner with money. And I have a saying, it's better to own 50% of a growing business than 100% of a business that never gets started. But it depends on your personality. But it's a good thought. Find somebody who has money and partner with them. Or you may find somebody who will guarantee a loan at a bank and become a co-borrower for your loan at a bank. There are times when individuals know that your business is good, but they just will not take the $50,000 and give it to you to put in your business, although you need it to grow. But they will come to the bank with you and guarantee the loan for $50,000. Or they'll come to the bank and sign as a co-borrower. That strengthens your application. So if you go to a bank, you got to stick to the facts, be truthful. I'm using banks because that's what we have in the Virgin Islands. It could be any lender. You want to go with confidence and integrity. State how much money you need. Never ask how much can I get. It means you're not sure what you're doing. Outline the use of funds. Explain how the business will generate cash flow. Because that's what the banks are interested in. Your ability to repay the loan. The ability to repay the loan is a key decision for the lender. They will also want to, they may not tell you, but they will check your personal credit or your business credit. A good credit profile is not a guarantee, but it gives you the best options for non-profit microlenders, SBA, banks, credit union, online lenders, and loan matching sites. We have a lot of loan matching sites on the internet lately. Convince the lender how much money of your own money is in the business. We're going to focus on banks, and I'm going to share with you what they're looking for. Repayment on time and in full. Because banks are in the business of lending money, because that's their model of making money. They don't sell oranges, they don't make furniture, they lend money. So banks expect repayment on time and in full. Banks are not in business of taking risk. So they're gonna check the character of the owners and the management team. They're gonna check their capacity to repay the loan. They will ask for cash flow, payment history, and other sources of income. How much capital you have in the business, what collateral you're gonna offer, and the conditions at the time that you're asking for credit. What's the economy like? Do you have a business plan? What's the industry? You will notice some of these terms could be rephrased like the 5 C's of credit: the character of the owners, capacity, capital, collateral, conditions. There are others. You as an owner of a business should have confidence. You should be professional, honest, and that makes you better than the existing competition. The banks will ask you for legal documents. That is why when we said you're going to create business, you have an entity. So you're going to create legal documents that will give you a credible foundation that the banks can use or the lenders can use to know that you're really in business and you're serious. So they want business licenses and registrations, articles of organization, copies of contracts, franchise agreements, commercial leases, buy-sell agreement. All of these may not be relevant to your individual request, but these are the general requirements or legal documents that most banks want to see. Tax returns for sure. At this point, I'm going to say something that you need to think of as a business owner. You want to be sure that you establish a credible foundation. So the name of your business is important. The address, the physical address is important. You have to have a phone, a landline. You have to have a website that's professional. You need an email that is professional, not Yahoo, not this. You want to have a professional email. So when they deal with you, all the documents say that you're professional and you're serious and you have a credible foundation. They're going to ask you for financial documents if you're already in business. If you're not in business, they're going to want projections. So you're going to list your personal assets available as collateral if you're providing your personal assets as collateral. Financial statements for each owner, especially if the owners own more than 20% of the business. Federal tax returns for each owner and for the business. Financial forecast for the business if you are in business, and forecast if you're about to go in business. Profit and loss, cash flow, balance sheet. And these are what they look like. You will see here actual, projected. If you were not in business, you will have to give them projections for the next 3 years of your balance sheet. What they're going to use, they're going to look at the numbers that you have and see if your projections are realistic. Here is an income statement, actual, projected. That's if you're in business. If you're new, you have to give them projections. And then you have to give them the basis of your projections. And then they'll analyze it and see whether it's reasonable. The reasons why they want to see these numbers, and here's your cash flow, actual, and projected. The reason why they want to see those numbers is, if you say you're selling oranges, and you have some numbers that doesn't seem to make sense with the industry averages, because that's what the lenders have. They won't tell you that, but they have in the background a business who's going to sell $100,000 in revenue, going to have a certain cost of goods sold. And they're going to compare what your projections, if you project you're going to have revenues of 100,000, why in your case, let me get it, income statement. Why in your case, your cost of goods sold is only 10% when the industry is 55%. You'd have to explain that. That's why they're asking you for those numbers, because in the background, they're going to check those numbers and see whether they're realistic. So you're going to approach a lender with a cover letter. It's going to be short, it's going to be well written. You're going to check your credit history. You're going to have to know your credit history. You're going to practice your pitch. You're going to build a support team. You're going to approach the lender after you've talked to your attorney and your accountant and your SBDC counselor. You're going to develop a business credit profile, and you can do that. You're going to ask what's in your business credit profile, what's in your business credit. What's a business credit profile? What's in a business credit profile? How to avoid errors and omissions? How to improve a business credit profile? And you can answer most of those questions by paying on time, keeping your personal finances in good order, keeping business credit profile in good order, keeping debt financing down, ensuring relevant trade experiences are reported. Because that's what is going to be in your credit profile, your location, what kind of industry you're in, how many employees you've got, what's revenues, who are you trading with. You're going to monitor the key indicators in your own report. You should get a copy of your report, your business credit report, to see what's in there, and then you can contribute to your own profile. So if something exciting happens in your business, you get a new contract, you can upload that information into your profile with one of the business credit reporting agencies, particularly Dun & Bradstreet. The other question you need to think of when you want to get business credit, especially a loan from a bank, you have to know the type of loan you need. A term loan is used to finance machinery, equipment, vehicles, and real estate development. The repayment of a term loan is principal and interest monthly over a period. It could be 2 to 10 years, 15 years, whatever is agreed upon. It's a major business expense, therefore the impact on your required cash flow need to service the debt. You have to be aware that if you enter into a term loan, you're going to have principal and interest to pay every month, and you have to account for where the funding of that cash to service the debt is going to come from in your cash flow projections. The other form of credit that you could ask for is a line of credit. The common term for a line of credit is an overdraft. It is used to finance production costs, inventory, or general working capital. Usually a line of credit is a short-term kind of credit. You want that kind of credit to match the activity. If you're buying cans of soda to be resold in 3 months, you don't need a term loan, you need a line of credit. The monthly repayment on a line of credit is only the interest of the outstanding balance. Usually, if you get a line of credit, they charge you a fee, a one-time fee once a year. So it's 1% of, if your line of credit is 10,000, 1% of that is the fee. Whether you use it or not, the bank keeps that money. And then if you're in credit, or you haven't used the line of credit, you have no more debt to pay on the line of credit because you're in credit. But if at the end of the month you're 5,000 in negative on your line of credit, they're going to continue paying your checks because you have a line of credit up to 10,000. They will charge you interest for that month on the 5,000 and automatically add it to your balance. At least once a year, the banks, the lender will expect you to clean up the line of credit. The line of credit is like a credit card. You don't want to max it and just pay your monthly payment on your credit card and keep it at 9,999 and your limit is 1,000. A line of credit is usually for 1 year, renewable for another year at a time. So in conclusion, we're going to suggest you start early. And the earliest thing you could do is get the structure of your business so that your business credit is separated from your personal credit. Although your personal credit is important, you want to keep them separate. You want to consider all your options, pursue the best for every family, have a business plan, create a financial forecast, discuss with industry professionals. As a business owner, you should have a relationship with bankers, an accountant, a real estate expert, an SBDC counselor, an insurance broker, and a business attorney. They can offer guidance and ideas on your situation that you would normally think of because you're so taken up with your own business. You need these industry professionals to give you a different viewpoint on things that relate to banking, that relate to accounting, the real estate. If you're a dressmaker and you're focusing on buying the clothes and making the clothes, you don't know about the numbers. You have to have an accountant. For example, here are some of the available resources. You're going to get the Internal Revenue, IRS, that's where you get the Employer Identification Number. Dun & Bradstreet, SBA, so here are some crowdfunding sites, credit reporting companies, Equifax, Experian, TransUnion. You can get an annual credit report, FICO. The magazine I refer to, entrepreneur.com. And here's another one, Free Corporate Credit Info. And it's question time. I think I've made it with 2 minutes to our 7 o'clock.
Well, Mr. Henry, you have a number of questions. And the first question is kindly repeat, I guess, your definition of bartering.
Okay. Bartering is where you don't have cash to pay for a certain product or service. If, let's suppose you were a seamstress and you wanted to move into Niski, okay? You don't have the 3 months rent to pay Niski up front. You could make an arrangement with the owners of Niski. This is an example. You would tell the owners of Niski that for the first 6 months, you will prepare all their uniforms. You will sew all the uniforms valued at so much against the rent that you would normally have to pay to enter into that location. That is bartering. There's no money exchanging, but you've exchanged a service or a product, that could be a product as well, for something that you didn't have or cash that you don't have to put out. That's bartering.
Okay, next question. Can you provide the name of a few factoring agencies, and do all banks provide this service?
This is an easy no and no. There's none in the Virgin Islands. There are some in Florida that I'm aware of, but I can't recall the names at this point in time. They are not as popular as regular banks. They're specialized banking institutions. That's what they do. They buy receivables from. They've got a whole staff like a regular bank that if you're an attorney and you have all these people who you've done business for and they owe you monies, and your accounts receivable is $2 million. You take and they're going 90 days due. You put them in a form that the factoring bank would have its people take a look at and see how much of it is collectible and how much they could discount it. And that's what happens. Maybe I should use the legal example. The better example is if you have a federal contract for paving roads and you've finished the work, but there's all this paperwork that has to be done, but you have another job that you need to start and you need cash. So your contract for that job is $100,000. You could go to a factoring bank and say, here's the contract, it's finished, I'm just waiting for payment. They will have the professional people look at it, discount it, and make you an offer. It's a negotiation. They'll tell you, for your $100,000 contract, we'll hold it, we'll take it, we'll give you $95,000, and they will wait 3 months to get the payment. But of course, you'll sign papers saying assign. That's the best I can do on factoring.
And did you answer how to get a DUNS number?
Yes, you go to Dun & Bradstreet and you apply. There's a
That's one of the many services that Dun & Bradstreet sells, correct?
No, yes and no. Dun & Bradstreet is a business like any other business. They're a collection agency of information all over, all kinds of information. What they will try to, you can get a DUNS number for free because they have an arrangement with the federal government that if you're working to have contracts for the federal government, that you have to have a DUNS number. You cannot do business with the federal government if you don't have a DUNS number. So Dun & Bradstreet have to give you the DUNS number based on your saying that, yes, I'm getting this DUNS number to do business with the federal government. However, they're in the business of selling information. That's their business. And they've been doing it for 100 years. They will try to sell you credit monitoring, credit checks, credit, all kinds of credit stuff, and then sell you the DUNS number as part of a package. Well, you don't have to buy the package. All you want is the DUNS number. And then you can visit the DUNS request service and get it. Or you could go to System for Award Management with SBA, and we'll take you to a link to get a DUNS number. But here's what you will need for your DUNS number. When registering for your DUNS number, you will need to provide the following: your legal name, headquarters name and address. If you're doing business, you've got to give them the doing business as name. Your physical address, city, state, and zip code. Your mailing address, if it's different from your physical address. A telephone number, a contact name and title, number of employees at your physical location, and sometimes they ask you whether you are home-based.
Okay, cool. All right.
While you're waiting to ask another question, I use the word FICO, and most people who have personal credit know that their score is based on FICO. FICO is Fair Isaac Corporation. That's what FICO stands for, Fair Isaac Corporation. It's a credit score company. FICO is an American public company that provides analytics, software, and services, including credit scoring, intended to help financial services companies make complex, high-volume decisions. The FICO mortgage score is between 300 and 850. Higher scores indicate lower credit risk. Each individual actually has 49 credit scores for the FICO scoring model, because each of the 3 national credit bureaus, Equifax, Experian, and TransUnion, all their database has their own database, and that goes into FICO.
Okay. All right, next question. Can you get business credit at DUNS number with an Inc. nonprofit? Can you get business credit at DUNS number? Okay, nonprofits should have DUNS numbers also, is because in order to apply for federal grants, you need a DUNS number. You got to be registered in the system of award management. You got to be in SAM, and in order to get registered in SAM, you've got to have a DUNS number. So nonprofits, if you're going to get a federal loan, a federal grant, or you're trying to get a federal grant, you'll need a DUNS number. All right, next question. Will a business credit card payment history be reported to the credit bureau?
It depends. It depends on what kind of business credit card you've got. So you need to find out when you get a business credit card, whether they will be reporting to one of the business credit reporting agencies. You cannot just automatically assume that they will report to the business credit. You want to be sure that they report. It's in your interest, especially if you have a good profile of paying your bills on time, that they report to the credit reporting, business credit reporting agencies. Okay, next. 9 out of 10 times they will, but I've known businesses with credit cards that don't report. Like not all vendors report to the credit reporting agencies. 97% of them don't. But when you're doing a transaction, the same way if you're dealing with somebody in Italy, for example, you want to know, are they registered with Dun & Bradstreet? The same way you want to know the cost of the goods, you want to know, are they reporting to Dun & Bradstreet? That's part of the business conversation that you should be having. You want to know, because your transaction with them has to be, if it's reported to the business credit reporting agencies, it builds your credit profile. And the more activity you have in there, other people who have access to your business credit profile or your business credit report will see that you've handled these transactions in the past and handled them properly and well. It gives them more confidence to deal with you. That's why you want those transactions to be reported to the business credit reporting agencies. Since I'm on that topic, let me also say this. Your personal credit file and score is private, and it's protected by a lot of laws of the government. Your business credit profile with Dun & Bradstreet or Experian or other credit agencies is not protected. Other businesses who want to do business with you, they have to do is pay a fee, an access fee to Dun & Bradstreet or to Experian, and you provide them with the DUNS number, and they can have access to your entire file. It's not private. It's public information, but it's in your file and it's with Dun & Bradstreet.
Okay. What is the website to obtain the DUNS number?
The website is Dun & Bradstreet. Let me just go back here. www.dnb.com.
Okay.
It's on the slide with available resources. And the presentation will be sent out to all those registered, and so they can get it from the available resources page. Okay.
That was the next question. So we will send out a copy of the presentation. The recording, that's a different question. We'll have to take that up with our sponsor for tonight's program. Okay. Now there's a question from MBH, and I'm not exactly sure what MBH is asking about the community-based listing. So MBH, can you unmute yourself and ask that question, please?
Hi, good evening. So my question, during the presentation, there was a notation regarding funding from community-based or nonprofit organizations. So my question to the presenter, Mr. Henry, is, does SBA or SBDC have a listing of community-based organizations that we as future business owners can take a look at?
A short answer to a long question is no.
However, the via telephone directory lists a whole bunch of nonprofit organizations in there.
But to answer the question further is not only to be nonprofit, but you want nonprofits who have part of their mission to fund small businesses. Some people give you a $1,000 grant to plant trees. I'm just making up stuff.
Mm-hmm.
But we don't have a listing of those nonprofits that do that. Recently, there was Micro Mentor came up with a program after COVID became or before COVID, and they had a whole, but there's not a listing. The short answer, no, we don't have a listing. SBA doesn't have a listing.
But
there's another reason why we don't have a listing. If we had a listing, we would have to vet them that we know what they're really all about. And at this point in time, SBDC doesn't vet accountants or lawyers. We can make suggestions, but we don't vet them, so we don't really provide a listing.
There's also
go ahead.
There's an organization called the Foundation Center. They have a list of nonprofits and grant agencies that give grants that aren't necessarily federal grants. So you could check that in terms of nonprofits.
Thank you very much.
Okay, and let's see here. Recording. Does factoring affect your business credit?
Yes and no, it depends. Your business credit is based on all your transactions. However, if you went to a factoring bank that doesn't report, that transaction doesn't get reported to the business credit reporting agency, so it will not affect your business credit. That's why I said it depends. If your transaction is with a business that is reporting to the business credit reporting agencies, yes, it will affect your business credit. It will show that you had that activity and you handled it correctly.
Okay. All right. It's the Foundation Center.org is the nonprofit, the organization that lists all grants that are available. The foundationcenter.org. I think I'll type that. I think I'm just double check that web address before I put it in the chat. Here you go. All righty. I think I got all the questions. Any more questions?
Yes, can you please put back up that address? Thank you.
Which one?
The foundation.
It's in the chat.
Thank you.
Foundationcenter.org. Oh, can you repeat the, okay.
Can you please repeat the Don and Bradstreet website info you were given earlier, please? Thank you.
Okay.
www.dnb.com.
Okay, that's also in the chat, but it'll also be in the presentation, and we'll send you a copy of the presentation.
Thank you for that.
My pleasure. Okay. Any more questions? Mr. Henry will put up the, the last slide. Oops. Okay, thank you for attending the AARP Entrepreneurial Webinar Series.